Welcome back to Fast Market. I'm Alex Coffey. He's Kevin Hinks. We're now joined by TD Ameritrade Network contributor Jenny Horn to continue the earnings conversation on a big winner, but one that's met some volatility as of late. Talk some Etsy. Jenny, good morning to you and thanks for joining us. Stock's trading $187.16. This was a $70 stock last summer, and it's down 13% over the last 2 weeks. What's the chatter on social media here around Etsy?
You know, people love this name, Alex. I think this is one that's sort of a pandemic winner because it offers goods you really can't buy anywhere else. Sort of unique handcrafted items that say, or maybe a personal touch when so many of us were not physically in person with one another. So for that reason, the stock rocketed over 200% in the last 12 months. And actually, I was looking at a long-term chart of Etsy. It's up about 870% since the beginning of 2018. So pretty wild move there, but now has come a little bit back to earth from their all-time highs of about $2.51 a share. So they have earnings today post-market, and the consensus is about 92 cents a share on earnings, which is significantly higher than the 10 cents a share they reported last year on revenue of about $532 million, which would signal about 132% year-over-year growth. So this stock is growing and growing well. And a lot of people say this is due to a highly effective management team. But also, I mean, I think that they just offer a great sort of, product line that, again, like I said, you really can't find anywhere else. They are very focused on delivering an enhanced shopping experience with more personalized searches, they say. And their marketplace platform, which is where merchants, of course, list and sell their products, is sort of the cash cow of their company. In the fourth quarter of 2020, the last quarter they reported, their marketplace revenues were over $473 million, so about 77% of its total revenue. And this figure grew about 150% year over year. So that is, of course, then pushing their total revenues so much higher. Now, they've also done something cool, which I think if you are on any sort of social media you've seen, they've sort of strengthened their search capabilities and upgraded their technology to then be more personalized and more targeted. So if you've ever said something like, the other day I was talking about how I needed new socks, and then every single website I opened then had, of course, advertisements for socks, which is just the most bizarre thing. But then Etsy is sort of following suit, and it's also then making their buying power stronger across all of their different merchants. So another thing is they're also expanding globally, and this has led to a big boost in organic traffic-based expansion. So across the board, really, really strong growth, really good things happening here. But what everyone wants to know is, can this momentum continue, even, of course, as things reopen? Because I think a lot of us were bored. So Etsy is a great sort of site to browse if you have nothing else to do and maybe buy things you don't necessarily need. But, with things reopening, with bars and restaurants saying they're going back to full capacity, I'm not sure. I am hoping that we won't be as bored in this upcoming year, which could be a downfall for Etsy. So that brings me to most of the conversation today on Twitter. I mean, no doubt, that's our first tweet today, which says, curious if Etsy can achieve these growth figures. I think crucial will be the outlook for the next quarters. Some headwinds due to the reopening everywhere are possible, but the underlying trend to e-com is still intact, and Etsy is established in an interesting niche with potential. So I do think this is interesting because I undoubtedly think the trend in e-commerce is a secular trend. I mean, I think that people love shopping online. People have loved the ease in which it's become in the last year, and many people have converted. I mean, my mom was someone that avidly didn't shop online, and now she loves shopping online. So I do believe that is a secular trend. I'm just not sure it can sustain these same levels of growth, and that could eventually end up, slowing Etsy's degree of growth. And our next tweet sort of talks about some of their guidance they provided in the last quarter and what matters to them really looking ahead. So our next tweet says, anything greater than 25 to 30% would be a good guidance for Etsy, given the massive pull forward they had last year. So I think this is interesting because I think right now we are seeing companies give basically A+ report cards as far as earnings go. I mean, we see them give strong earnings, strong revenue, strong guidance, and yet the stock falls. So I have to say that, yes, maybe they have 25 to 30% guidance, but I don't know if it necessarily matters in terms of trading the stocks. We have to be so risk defined in this market where things just, they move one way and you think they'll move another, Kevin.
Yeah, believe me, General Motors, right, this morning reported revenues below expectations and the stock rallied. There is something that's a head shaker, a head scratcher. So trying to figure out these markets is very, very difficult. And so you've got to play them, conservatively and risk defined and be ready for just about whatever happens. So Jenny, this is an interesting company because there's only a couple places where you can buy unique things with e-commerce, right? It's like that thing that everyone wants, which unique things, not boring things, not groceries, but you get to use e-commerce to do it. And what's really surprising about this company for me is no one has really tried to give them any competition, right? For something that looks like it would be ripe for competition, they still stand out, they still dominate. So this is a company with kind of a moat around people, businesses, craft people, things like that. Their whole business model is through Etsy and playing through Etsy. So they've got a great plan going forward. And here's something that's interesting. For a growth company, they make money. There's something new for a growth company. They're profitable. So there's a lot of reasons to like this name. And, even though it may not be Kevin Hinks's niche, it's certainly a lot of people's niche, guys.
Yeah, and Kevin, I'll even take a step further too. In what's been a pretty tough year for many small businesses, this is kind of the feel-good story side of things. This is a company that's helped the small independent business bring their product to the world. I think the more of these kind of companies that are out there, the better the recovery potentially could be. So I always like these stories and companies like this in the sense of what they're doing, not necessarily for an investment or a trading purpose, but rather the story behind them. Jenny, great setup as always. Thanks for joining us. And we're looking forward to some Etsy earnings when they come later on. I believe it is this afternoon. And so as we say goodbye to Jenny, I want to welcome in Megan Brantley, the VP of Research at LikeFolio.com. Let's track some of this social data and see if it's keeping pace with the incredible run that we've seen for this stock. And even though the stock has met a period of volatility over the past few months, as many names have, particularly in the stay-at-home space, Megan, this has still been an incredible performer, going several multiples to the upside here. But is the data remaining strong, or is there concern in terms of the direction in which people are talking about using this service?
Yeah, so whenever we look at Etsy, it's really interesting because it almost reminds me of a hybrid between a Pinterest and a Shopify in the sense that it's really allowing for this discovery. It's really catered toward personalization. They're improving their search functions, as Jenny mentioned, but then they're also leveraging these buyers and sellers and connecting these merchants. And so I think that this is a really interesting niche that they've carved out for themselves. And so when we listen for this, we're listening for mentions of these buyers and sellers using the Etsy platform. And what we've seen, obviously, is tremendous growth over the last year. We saw an extremely strong holiday season, and now we're seeing that those purchase intent mentions, so people talking about using the platform, that's starting to settle in a little bit. So whenever you look at this is a 30-day moving average of those demand mentions of engaging with Etsy's platform, and you can see that it's starting to taper down. And now, to give some scale, even though we're looking at this and it looks like it's down about 34% year over year, these are some really tough comps. This is some really tough growth that they're having to stand up against, especially as we enter this year over year compared to when people were in lockdown. Whenever you look at this compared versus 2019, it's about 71% higher. So I think that that's an important note. So the key takeaways for me whenever I look at this, when we're looking at Etsy, is that demand is there. This platform has grown, and there's obviously some stickiness. However, it may not be enough to meet this new extremely high bar to continue crushing these records that they've set in the past few quarters, powered by this stay-at-home movement. So this is something where we're watching a little bit of tempering. We're watching a little bit of deceleration and growth. And so that's something to keep in mind heading into this earnings.
Now, Megan, I'm going to tie a discussion that we had earlier in the week into this conversation. And you see the purchase intent chart of Etsy. And it starts out, the green line, if you go back to July 2018, around, let's round off, as traders have been known to do, and say, let's say it's 250, right? So with all this rise up to about 850, right? So it's about over 3 times the volume, but it's settling in now about, well, let's say it's just under 500. So that, even that settling, that net effect is basically 100%, almost 90 to 100% higher than where it was a few years ago pre-pandemic. So that stickiness that we're talking about, it looks like it's a descending graph, but this chart is still massively higher than it was pre-pandemic, correct?
Yeah, you're exactly right. And that's what makes this, it's tough if you're an investor, because you're looking at this and you're saying, okay, there is a slowdown in growth. There is this slowdown in demand whenever you're comparing versus these really explosive quarters. And it really depends on how the market's going to react to that. I think that this is something that we should be aware of. You know, our charts are really sensitive to this slowdown in user growth. And so I think that's what you're seeing when you look at the far right of that chart, just that a little bit of a slowdown, a little bit of a deceleration in growth. And that's kind of informing, at least for this earnings report, a more bearish signal for us. But I will note this is a really short-term signal. This is something where we think, you know, maybe the expectations are really, really high. We don't know if Etsy is going to exceed that bar for this report. But long-term, this company is extremely well positioned. When you look at happiness, Etsy has some of the highest happiness ratings of all the companies that we track. It's about 80% positive. Just to give a reference, eBay, which is another kind of platform that you would imagine connecting buyers and sellers, very different from Etsy, but still close enough that you can make a comparison. It's around 63% positive, so more than 15 points lower. So Etsy is consistently making its consumers very happy, and you definitely see, especially compared versus 2019, this is a growing platform, and this has gained traction. So it just comes down, you know, short term, we're leaning bearish into this earnings, but long term, we really like this company. We think that it's set up for continued success.
And Megan, there's a term that I believe Jenny used, I know Kevin used, and I know you used, and that's the term niche. And where there's plenty of companies in the public space, especially ones that we talk about on a daily basis here for cash tags, that are also in niche spaces. As a company that's growing substantially, looking to do so for quite some time into the future, and is having very, very happy customers, should that term niche be concerning to investors? Or should that be something that makes them happy to hear because they're executing very, very strong in their space?
I think that at least right now, this is something positive because they're being propelled by these tailwinds, if you will, this personalization. We see mentions of that driving purchases. So consumers want these unique items. They want these personalized gifts, at least for now. Those mentions just generically of people buying a personalized item or seeking a personalized item are up about 8% year over year. So we're showing continued strength that this is a trend that's continuing. This wasn't just some short-term COVID shift. And so I think that that's something positive that Etsy could look to continue to drive future growth. So this is something where long-term, we think this focus on personalization, this focus on discovery, and this connection between these buyers and sellers, that's something that continue to help propel Etsy.
We'll keep monitoring this one, not only just for this earnings announcement, but going into the future. I'm sure we'll have many more conversations here, Megan, on this company in particular. Great stuff as always. Thanks for joining us. Megan Brantley, the VP of Research at LikeFolio.com. Kev, one thing that we haven't talked about in a while